Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone enjoyed the long Memorial Day weekend, got away from the charts for a minute. Markets are waiting for us on Tuesday, so we're going to take a look at what the shortened week has to give us. A couple interesting moves right off the bat. A quick move into some daily price movement range resistance to the upside on Apple. That along with a little bit of stability and strength and some of the other magnificent sevens should keep the NAS possibly supported. I'm not going to say necessarily ready to punch up to higher highs, but definitely supported. And we're taking a look also at what's going on with the S&P. The intraday timeframes of the indices are pretty right now choppy, if not arguably a little bit bearish in momentum, mostly the NAS, but neutral trend. Now, what's the difference, Rog? Momentum versus trend. What's the difference? Think of it this way. If we all think a certain way, that's sentiment, right? If we're bullish or bearish, then we start to act on what we think. That initial movement is typically momentum. It can be surges, sort of lurches. It doesn't have to persist. So remember, momentum is the least important of the way that we look at the three factors: sentiment, momentum, and trend. If the momentum is bullish and we start to see consistency in the momentum, that will ultimately give us a trend. And so we'll keep an eye out for that. Now, speaking of all that, let's see how all that comes together, because we do have an example of at least early morning look. It's 9:02. Who knows where we'll be in 28 minutes, but you can take a look here that we do have a trend on the 5-minute chart of the Russell. Now you might say, Rog, which one's the 5-minute? It's the one all the way over to the left. So take a look at that. Green across the top, meaning we've been moving with momentum, bullish momentum, since about 7:30 Eastern this morning. That momentum persisted, and then right about 8:30, an hour later, we've organized into a trend. A little wobbly, a little fresh, but on the 5-minute chart, we've got a Russell trend. So it's the Russell this morning that happens to be the strongest. Like I said, on the flip side, though, you've got quite a bit of little bearish momentum in the NAS, but again, not a bearish trend. So momentum can persist for a bit without the trend saying, hey, that's enough for us to say there's a higher probability of continuation. And that's what we've got this morning on the broader averages. What else do we have? Got to take a look at gold here, because gold's been moving higher pre-market. Take a look there, as has copper. All right, so both the metals, copper and gold, bullish momentum. Did have a trend early this morning, lost that trend, but again, the bullish momentum persists. And then what about being above or below the previous session close? It's another sentiment read. And you can see there that the gold chart is above the previous session close. Again, what are all those little lines in the sand that can tell us that sentiment is more bullish than bearish? And how does that then lead us to think about support and resistance? If sentiment is bullish and we're above the previous session close, it's not that we just buy, right? It's not as if that in and of itself is a signal. It simply means that there's a higher probability for support on a pullback and then a continuation. And if the trend persists, there's a higher probability of higher highs. So we're always thinking in probabilities of what will traders most likely do when things are bullish in terms of sentiment. They'll likely break resistance and they'll likely hold at support. And that's what we're looking for, those probabilistic edges when we're trying to navigate, what it is we want to do in terms of being long or short, being long calls, being long puts, etc. All right, so that's what's going on in gold. And I bring up gold and copper because metals and mining, as well as gold miners, have been atop of the leaderboards, so to speak, when we talk about the month-to-date relative performing sectors. Right? We can't ignore XME. We can't ignore GDX. These have been quite strong. And when you take a look at the underlying metals in this case, gold and copper, they have remained really well supported. And look at copper. Copper is a gorgeous trend. I mean, when you take a look at trends across many, 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 many symbols and many, currencies, treasuries, metals, indices, gold's been one of the best performing symbols out there. Or sorry, copper has been one of the best performing symbols out there. And that's going to disproportionately benefit miners, metals and minings, things like XME, Alcoa, Freeport McMoran. Okay, so we'll keep an eye on that as well. All right. So as always, gang, if you have any questions, feel free to type them on in, and we'll go from there. So what have we discussed so far? If we're looking at sentiment plus momentum equals trend, think about it in that sort of formulaic approach. Sentiment plus momentum equals trends. That means my first job every morning is to get those lines in the sand clarified. Where are we in terms of the previous session close? Where are we in terms of even things like an anchored VWAP? Where are we in terms of the point of control? Those are volume levels, by the way. Anchored VWAP, a point of control. That's a look at how many contracts, how many shares, how much was traded, not on a certain day or even a certain time, which really isn't all that helpful. Looking at VWAP, looking at point of control is really about how much was traded, shares, contracts, etc., at that price. And that's going to give us a lot better understanding of, we talk about size. Where's the size? Where's the participation? What are the levels from which there is a bullish or bearish sentiment, right? And those are really easy ways to do it that don't require a lot of sophisticated analysis, right? They're just indicators. They're just things we can lay on the chart, and they are what they are. All right. So that being said, let's jump into our first question of the morning, which is, what is my take on wheat? All right. So this is ZW. So we mentioned commodities, right? Our commodities on the move. While we're taking a look at wheat, let's take a look at some other ones. So is wheat in an uptrend? Absolutely. We just spent the entire month of May in an uptrend. And we've seen commodities, not just things like grains, but we've seen things like metals. The commodity that's probably the most bearish is crude, or at least crude and the crude oil stocks, energy stocks. That's probably about as weak a corner of a major group of commodities are, right? That energy sector is still kind of struggling. So I would buy the dip. Buy the dip is very reasonable on ZW. And by the way, if you don't trade futures and you're looking at the question of ZW, what's another way to take a look at it? As long as the strike that you're looking to buy has at least 500 open interest, take a look at WEAT. This is the ETF for wheat, right? This is the ETF for wheat. And if the liquidity is there, it's a great ETF alternative. But obviously, we want to keep an eye on ZW. So as long as we're looking at some grains, let's take a look at the other two major grains. So if I'm thinking about the Dow, NASDAQ, and S&P of grains, that could be easily considered beans, corn, and wheat, right? So taking a look then at corn, ZC. And oftentimes these commodities will generally move together, not always, because remember, there are things that we would look at in the data from what's being planted, what's growing well, what's in demand, those kinds of things. Sometimes farmers will forego one grain favoring another because it's just going to typically bring them a better return on their planting, meaning what's trading up, what are the contracts that they can deliver at a higher price, right? I mean, think about why the futures contracts were developed in the first place. They were a hedge for farmers. Not even a hedge. I actually hate that word. That what they really were is in many ways for farmers to say, what can I sell my bushels of fill in the blank grain at? And then how do I know that that's what I'm going to get when I deliver, right? So if you're operating a business and you had no idea, let's say we're making donuts and I don't know what my donuts are going to sell for. How do I know how much to spend? How do I know how much to hire? How do I know how many to make, right? So if you think about not knowing what your donut is ultimately going to sell for, makes it very difficult to have the confidence to make them in the first place. So the futures contracts were really developed for farmers to say, look, if I sell corn, this would be the front month of corn. So maybe it's a June delivery, maybe it's a September delivery, whatever it is. And you say, look, in that delivery month, when someone's ordered corn for me, I can sell that for 466. Now I can start operating as a business. And a lot of times we forget, what the essence of the futures contracts really were. Yes, we love to speculate, but there is a very practical side of futures. So you'll see corn is mostly moving higher and soybeans are trying to move higher. So I look at those three grains as sort of the Dow, Nasdaq, S&P of grains. And when those three are moving higher, there's going to be then strength in agribusiness. So think of all the stocks that benefit from a higher price in these grains. So again, if you're able to collect more, what are you going to do? Well, you might buy more equipment. You might need more equipment. So take a look at things like moo, M-O-O, that's agribusiness. Take a look at things like deer and cat. What are the companies that will benefit from strength in these commodities? So that's where it's really cool when you start to see all the dots that connect to create that rising tide of not just strong corn, but strong beans, strong wheat, and then what else will benefit from that strength. The one thing that I would note on beans is that it's still trading, although it's an uptrend, it's still trading a smidge below the 200, which I would say likely makes wheat, to the original question, when you take a look at all three, you want to see them all moving together, ideally, but it really does show that wheat's looking pretty darn good. All right. So with that in mind, again, what would buy the dip be? Buy the dip is one of those phrases that needs context, right? Everything needs context. When would I want to buy the dip? What is buy the dip? Buy the dip is just a colloquialism for buy a pullback to support, buy a sell-off to support, buy a retracement at some sort of support level. So the dip isn't something that everybody agrees upon. The dip is to what degree and what time frame are you looking for a little bit of weakness to buy and then expect a resumption of, in this case, the trend. I like the low that we're seeing here. It's a minor low on the May 17 low, which was 650. And then interestingly enough, right around 650 to about 642-ish, you've got the mean reversion of the wave. Now, again, mean reversion is something that's very subjective. Not everyone's going to say this is the mean. Everyone has a different meaning for what the mean is. For some folks, it's a 13 EMA. For other folks, it might be a 20 simple. For other folks, it might be some sort of Fibonacci retracement. So remember, there is no the mean, right? It's the mean that I'm using or the mean that we are using, right? So when I'm taking a look at that support, yeah, around 650. Around 650 could be an interesting zone all the way down to about 642. So moo is definitely something we want to keep an eye on. And if you're wondering, okay, Rag, what's in something like moo, right? You kind of open the door there. If we're talking about the holdings of moo, what are we talking about? Not all of them are super liquid, but you have things like Deere, Corteva. You have things like Archer Daniel Midland, Tyson Food, right? So these are names we all know pretty darn well. We just got to make sure there's liquidity at the option chain for them. But those are the kind of things that are in moo. And those are the kind of things that if corn is moving higher, maybe moo starts to follow suit. Now, remember, moo doesn't have to move with grains. And grains should have a pretty well-established trend before moo can benefit, right? So remember, just like I would get a read on crude oil or natty gas, or unleaded gas, I want to see a nice trend in the underlying commodity before I start to commit to things like Exxon or Chevron or Devon or etc. Right? So remember, let the commodity go first before we start looking at the stocks that benefit from the higher or lower prices in the commodity. All right. So that is what we've got there. And that is what I'm looking at so far this morning. Let's go take a look at we took a look at gold and copper. What about bonds and notes? Really interesting place we sit once again in bonds. Bonds are in a holding pattern, but a bullish holding pattern. And the reason is, again, there's still some optimism around rate cuts. And generally speaking, there's another thing that bonds will reflect. And that is, Jerome, are you holding rates too high for too long? And bonds will typically look ahead, right? Bonds aren't thinking about May 28th. Heck, they're not even thinking about June 28th. Typically, when you see movement in bonds, it's projecting 3 to 6 months from now. 3 to 6 months from now, would it make sense for yields to be lower? 3 to 6 months from now, would it make sense that the higher yields, meaning the higher rates for longer, are damaging employment or damaging the economy. And if bond traders look at that and say, nah, we're okay, we'll continue to see movement higher in the long bond and in the 10 years. Let's take a look at the ZN. ZN's not quite as convinced. This is a slightly shorter end of the yield curve relative to the long bond. So if you take a look at ZN's, the 10-year, not quite as convinced, although similar look, right? Kind of a holding pattern, mildly bullish holding pattern. And you could look at the entire, kind of scope of yields, whether it's a short term, 1, 3, all the way out to that 27 to 30 year. And by the way, a lot of folks do like to look at TLT instead of the long bond. And I wish there was better liquidity, but IEF is the ETF for the 10-year. All right, so that brings us to the next question. Paul asks, does Top Tier Outlook come out this week? Yes, Paul, I am going to write a Top Tier Outlook update either today or tomorrow and get that out to you all by tomorrow. So we'll take a look at this shortened week, but where our focus is. And if you're in the Sector Secrets Mastery Room, you know what we're focused on, a lot of what we're talking about here. We've been bullish. I'm going to remain bullish in terms of the main part of my trading book, meaning if I'm looking at what could happen in a time horizon of the next few days to few weeks, I remain looking for those strong sectors and strong stocks, even strong commodities. And I want to get long on those days or sessions that were weak. And then I'll also do the next thing, which is I'll look up that relative performance chain. And I'll say, okay, what's sitting atop that chain? This is a little bit of what goes into the Top Tier Outlook. And again, Top Tier Outlook's pretty self-explanatory. What is the top tier, right? What's sitting atop that list? Where is the strength and trend, and therefore where is the highest likelihood for follow through? Well, what's really interesting is 3 of the top weighted sectors in the NASDAQ are in the top part of this list. You've got SMH, right? A lot of that's NVIDIA, but let's not forget, before NVIDIA had its big gap up, Qualcomm was doing just fine. Texas Instrument, Taiwan Semi. So this isn't just NVIDIA, but NVIDIA's move does have a disproportionate weighting on SMH. So because this one stock has 20% weighting in the SMH, it's going to have obviously a whole lot more say. But if you notice, SMH was moving higher before NVIDIA had earnings and announced the split and everything else. And a lot of that strength was on the backs of lesser weighted, although still very important symbols within the SMH, like Qualcomm, which is still probably my favorite symbol within the SMH. Below that, you see XLK. This is Microsoft. This is Apple. And this is NVIDIA as well. So you can see 2 of the heaviest weighted sectors in the NAS are moving higher. Why would I want to be bearish on something where the cylinders, think about the motor, right? They had the Monaco GP this weekend. And congrats to all the Ferrari fans out there. Tifosi. The SMH and XLK, right? Those are cylinders within this engine we want to call the NAS, right? If you look just a little bit below, there's XLC. This is Meta. This is Google. And so when you look at the NAS and you look at the effect that tech has on the broader averages, it's a big one. And so when tech is as strong as it is and as well represented across the NAS, S&P, and Dow as it is, again, there's this sort of saying, right, that summer could be weak. I won't even utter the phrase. You all know it rhymes. But so far, it doesn't make any sense to expect that the ism, right, what we're supposed to do in May and then what we're supposed to do, it isn't playing out. In fact, it's actually, when you look at history, it's actually quite wrong. In fact, if anything should be done, somebody needs to come with a rhyme for April, right? Sell in April and something. April's harder to rhyme. I guess that's why they settled on May. But we're not seeing signs of that kind of summer behavior at all. All right. And those are some of the things we tackle with data, right? The whole idea of Top Tier Outlook is what is sitting at the top tier for opportunity. And then what's the data that supports, whether it be price, whether it be seasonals, whether it be macroeconomic data. What are those things that support the expectation? All right. Next up is any idea why the Dow is weaker than the S&P or the NASDAQ? Waiting, Java. So think of it this way. I know there's a lot to be said about when all the indices, and you can include Russell on that. There's a lot to be said about when all the indices are moving higher, right? But let's think about what is in the Dow. The Dow doesn't have to move because of tech. In fact, the S&P doesn't really even have to move because of tech. So a lot of times this expectation that all three of the averages must move together or should move together misses the point that, and I know that's not what you're asking, but what it does is it makes traders think that they all move for the same reason, and they do not. Because if you crack open the 30 stocks in the Dow versus the 500 stocks, or at least the top, say, 15 weighted stocks in the S&P 500, or you look at the top 6 to 10 stocks in the NASDAQ 100, those stocks are different and they're weighted differently. So if I were to put together a Dow index, the ingredients of that Dow are markedly different and fewer than the NASDAQ. And the same thing goes to the S&P. So the reason they'll do their own thing is because the individual components within them are doing different things. So what's the heaviest weighted sector in the Dow? Financials. Financials, followed by tech, followed by healthcare. Then you go down a little bit further, you got energy, industrials, and transports. Industrials and transports are not the most influential part of the Dow any longer. It really is financials and tech. So when I look at financials, so let's say tech's moving higher. Great. But can it move higher enough to offset any weakness that might be happening in financials or healthcare or industrials or energy? And if it can't, right, there's a dilution there, isn't there? It's not just one sector leading everything. It's never one stock leading everything, right? I know a lot of folks are thinking, all right, NVIDIA delivered well, up and away. Only in the sectors and indices that are weighted with NVIDIA. In fact, when NVIDIA was moving higher, if everyone remembers the gap up day after earnings, what did the equity markets do? They looked nothing like NVIDIA, right? So be careful thinking, out there in general, be careful thinking one name is going to be the reason everything moves. I mean, I think NVIDIA, most especially the day after earnings, reminded us, oh, right, the stock market is a lot of stocks. While this one might be very heavily weighted, it's not necessarily a reason why anything moves up. In fact, NVIDIA is up today. And as I mentioned, the NASDAQ's kind of weak. So remember, there's lots of reasons that the indices will move. And if we can find the heaviest weighted stocks, the heaviest weighted sectors, and look at them, you step back and go, oh, those are the cylinders in the motor. All right. Just like that, gang, I've run out of time. As always, thank you so much for being here for Charts and Coffee. Be good to each other, gang. I'll see you tomorrow.